All right, good evening, everyone, and shalom to everyone wherever you are. Today, I bring you this podcast, and I'll be researching on theories and bringing it before you. So, our first theory today is fraud triangle, and this is an audit theory by Donald R. Cressey, who lived between 1919 and 1987. These are my references. So, what is fraud? In a broader sense, fraud encompasses any crime or gain that uses deception as its principal modus operandi. All fraud involves some form of deception, but remember, not all deception are frauds. Under common law, 4 general elements must be present for fraud to exist. That is 1. A material false statement. 2. Knowledge that statement was false when it was uttered. Number 3 is that reliance of the victim on the false statement. And the number 4, damages resulting from the victim's reliance on the false statement. On our introduction, the fraud triangle is a framework used in auditing and forensic accounting. The theory was advanced by Donald R. Cressey, 1919 to 1987. His research published in The Other People's Money, a study in Social Psychology of Embezzlement. Cressey's final hypothesis was trusted person became trust violators when they conceive themselves as having financial problems that are non-shareable, are aware this problem can be secretly resolved by violation of the position of financial trust, and are able to apply their own conduct in that situation. Verbalizations which enable them to adjust their conceptions of themselves as trusted persons with their conceptions of themselves as users of the entrusted fund of property. So later on, Cressey's hypothesis later became better known as fraud triangle. The theory explains the 3 key factors that lead to fraudulent behavior. Number 1 is opportunity, also known as a perceived opportunity. Number 2 is need or pressure, or a perceived non-shareable financial need. And number 3 is rationalization. Opportunity. Fraud occurs when there is a chance to commit it without detection. This is caused by weak internal controls or poor oversight. A good example would be when you have an employee who controls both cash handling and record keeping at the same time. On the need or pressure or incentive, remember the motivation or reason for committing fraud. Okay, some of these reasons include financial, work-related, or personal pressures. A good example will be manipulating figures to secure a bonus. Probably you're fixing the books to get yourself some money. Rationalization. This is a justification of fraudulent behavior. This allows the fraudster to view it as acceptable. A good example is, I deserve this, I will pay it back, the company won't miss it, including other excuses. So fraud triangle vision, you have it over there. We have the opportunity at the tip, we have the need or pressure, and rationalization. In terms of audit relevance, auditors use the fraud triangle to assess fraud risk. Presence of all 3 factors increases likelihood of fraud. Auditors must adjust audit procedures when risks are high. Key takeaways is that fraud triangle explains why fraud occurs. The 3 factors are opportunity, pressure, and rationalization. Auditors use this to assess fraud risk. Presence of all three is equals to high fraud likelihood. Remember, strong internal control reduce opportunities. And that brings me to the end of my presentation today. Thank you very much and subscribe to my channel. Adios.